Morning traders, I'm Greg McKenna. Welcome to Markets Morning. It's Monday the 10th of December 2018. A really poor close at the end of the week for stocks. For the US dollar too, Euro's back near 114. But the reality is that we're all still within our ranges. You know, Euro's 112, 115. The S&P 500's 2600, 28, 23. It closed obviously closer to the bottom of the band at 2633. The Dow got belted, the Nasdaq got belted, some catch up to be played in Europe when they open on Monday. But overall, we're still range bound. And that's because we've still got this continuing uncertainty. You know, this time last week, we had gap opens, we had risk on, there was all this positivity about the trade deal or the trade truce. The fentanyl idea really got me excited about the fact that maybe there was a real deal done. And then, of course, Tariff Man injected himself and kind of blew up sentiment. Then we had these difference of opinions about what's going on. We've got the Huawei. Thanks for pointing that out to me, how to say it properly. The Huawei thing now with the CFO, and it's increasingly clear that neither President Xi or President Trump knew that was going to happen, or that it had happened when they were chatting. So, you know, Friday we had non-farm payrolls out, 155,000, 3.1%, wages growth, 3.7%, unemployment. A pretty solid number, but not as strong as it could have been. And not as strong on two counts. One was that it was only 155,000, which was less than the 190,000 the market was looking for. And because the monthly number of 0.2% on the wages missed the 0.3% that was expected, it was kind of read softly, even though the annual number at 3.1% was exactly where it was supposed to be. So, but that didn't really hurt the market. It was Pete Navarro contradicting Larry Kudlow, who was his normal Panglossian self. And I hope Kudlow's all right, because he doesn't look well when you see him on telly at the moment. It looks all very puffy. But anyway, what we had was Navarro say, hey, this is, this is not a soft target. We are still going forward if China doesn't deal. And then that turned the market upside down. And then that hard number for 90 days does appear, or was, actually affirmed by Robert Lighthizer. So where are we now? Let's dive straight into the charts and we'll talk about some things. We've had a gold breakout on the weekend. We've had bearish engulfing in a number of markets on the weeklies and in the Aussie and those sorts of things. We've got bonds having opened the week around 3% last week, hit a low of 282, finished at 285. We have got a lot of markets that are in a little bit of trouble. Sorry, President Trump's just tweeted something, and I'm just, he's just tweeting about all the turnover. But let's just talk about bonds first, because in many ways, bonds are at the essence of what's going on, or expectations about growth, expectations about the Fed. And the reason I belabored the point about non-farms is that it was consistent with what the Beige Book said. Now, James Bullard, he's a dove anyway. He's like the dovest of doves. He said the Fed should think about not tightening. Now, I think that they have to tighten, but they can give us a dovish tightening if that's what they feel like. Is there a pause coming? Yes, there's a pause coming. As I've written and I think I've said, this is how the RBA does it. It moves, it watches, it pauses, it moves again. Now, sometimes those delays can be 12, 24 months. This has been the longest delay in the history of the RBA, I believe, that has left rates so long. But it does that with a view to trying to maximise growth. And that's, of course, what the Fed's trying to do. The Fed's not interested in the sort of the boom-bust cycle. This Jerome Powell Fed is interested in trying to even out, trying to get growth back towards potential, leave rates at a level that neither hurts or, sort of excites growth, and just keep chugging on. So this chart here, this is of the yield curve and recessions, and it's got everyone excited. And so that's the thing that folks are looking at. You know, closed on Friday at 13 points. So you've got that genuine concern. Also of genuine concern is the data out of China over the weekend. I know I haven't even got to the charts yet, but that was weak. Look at that. This is the previous for exports. That's what was expected. Almost half of what was expected. This is the previous for imports. That's what's expected. You know, almost 20% of what. So watch out for German trade tonight, because So this is China's imports versus German exports. Now, are we going to see continued weakness in German exports as a result of what's going on there? Just something to keep an eye on. Now, the other thing about this is inflation. The inflation data undershot. What does that tell you? It tells you aggregate demand in China is not in a good way. Why is that important? Because it tells you about the weakness in the economy. Notwithstanding the services PMI shooting the lights out last week, the Cajun services PMI. Look at this, PPI 2.7. Now that's consensus, sure, but it's a big deceleration. 2.4, actual 2.2. Small fall, bigger fall in inflation. So that's where we are as we kick off the week. China is struggling. The Huawei thing could derail. If it does not, that's a real positive. That's a range reinforcer. So just keep an eye on Huawei. And of course, I haven't even mentioned the mess that is Brexit. Anyway, so what have we got? We've got a shoulder, we've got a head, we've got a shoulder, we've got a neckline. Hasn't broken. Now that looks like it's slightly out, but has not broken. What have we got here? We've got a weekly that is starting to look a little bit different. So what I've got here, folks, is just on the weekly charts, the MACD is actually pointing up. You can't see it there, but yes, it is. It's actually pointing up. That's a signal. Where are the stochastics? Stochastics are above 30. So for me, that's not the greatest signal in the world. All right. So what have we got? We've got 114.54 is a 15, and 115.65 is a 30. Overall, the medium-term downtrend remains intact, but there is room for a move. 114 sort of 40.50, then 115.15. But I'm not invested that much in that. You know, GDP in Europe is still weak. Dollar yen, interesting. I'm going to blow this up for you for a sec. We've got this little trend line that we've been talking about. It's still holding. A big down week last week. It's really difficult with dollar yen. The US dollar weakness, or the focus on the Fed, is interplaying with stock market weakness, but it's also interplaying with a weak US dollar. And so you're getting a dollar yen that's range bound at the moment. So for me, 114.50 to 114.75 is still the key. A break above that and you get 118 and change. But support is now down here at sort of the 112 region. So if it goes below 112, you'd probably have to say that dollar yen is turning. That would probably be consistent with a big fall in stocks. But I'm not going to preempt it until those lines break. Now, Sterling's under a little bit of pressure this morning, 127.12. Is Theresa May going to postpone the vote Tuesday? I've just saw something on Forex Live that says that 48 letters have gone in for a spill. So does that mean, though, that the Conservatives are going for a hard Brexit? Do you honestly think that Emmanuel Macron, after what's just gone on in Paris, is going to sit down and renegotiate Brexit? I think, if anything, this hardens him up. Can you imagine what the French fishermen are going to do? They've just seen the yellow vests win. Now, this is a really important... I'm not sure. It's interesting. I think we're going to get a second referendum. Then we'll have to see how it's shaped, what it says, those kind of things. The ECG makes their decision tonight, so Monday, German time, or Brussels time, or London time, whatever you want to call it, and that could open the door to the rescission of Article 50, which would be very interesting. But for me, key thing here, 126.60 breaks and holds on a day close. You've got a run towards 120. Now, remember there's a way that you can trade them, and this is not advice. This is just the way I've always done it in the past. You get a break, you run with a break, you've got a small stop loss, maybe 50 points, something like that. Remembering that when I say points, I mean pips. It's because I was originally an interest rate trader, and pips to me sound stupid. Anyway, you might be prepared to lose 50 pips, 50 points. If you get it closed, then you might add to your position, that kind of thing. So that's the way I trade that. In terms of the Aussie, seriously ugly, bearish engulfing week. Look at that. 73.93. Now, we have to get down and through. Remember that bar over there? Got to get down and through 71.60. If it gets down and through 71.60, then it doesn't just become a weekly bearish engulfing candle 1 week to the next, but it becomes a structural bearish engulfing outlook taking into account the last 5 weeks trade. Now that for me is the key. I'm small short at the moment. I'll get shorter if 71.60 breaks, and I'll be looking for a run to 70.20 or thereabouts. Dollar CAD had a bit of a turnaround last week. Tried 133.85 is that level I need to see it close above on a weekly basis to really kick. It was able to get through. I think it got to 134 odd, but it couldn't close above. It's now back at 133.30. So that to me is a range reinforcer or a false break intra-week. And on that basis, it's as you were for dollar CAD at the moment. You could see an uptrend there, draw a flat top across there, a close above 133.85, and the outlook brightens quite substantially for dollar CAD. Kiwi is had a reversal. The fact that it's a 200-week moving average just means nothing to me. But I have it on that chart just indicative because I know what other people are watching. So the overall downtrend's still intact. What you'd have to say with the Kiwi now, we've got the stochastics in the overdone region. There will be support back here at the 30, which is about 68. I would expect it, if it does fall to 68, which I do expect, it will find some support there. The issue with the Kiwi and the Aussie, for example, let's just abstract those, is that in the Aussie's case in particular, the Citibank Economic Surprise Index for Australia went from plus 19 to minus 19, roughly, in the space of 1 week. So it's no surprise the Aussie had bearish engulfing and the Kiwi did not. It's no surprise that the Aussie Kiwi has broken the monthly wedge pattern and is right back on 100% retracement of a previous move. Australian data has flipped. The outlook, OECD talking about a housing collapse, is troubling. That's not the same situation for Kiwi. So even though the day-to-day movements and correlation of Aussie and Kiwi remain strong, the movement of Aussie Kiwi reflects those divergences. What have we got here? Well, we've got this long-tailed fellow. A trade truce, if reinforced this week, is positive for the yuan and negative for the US dollar. That would therefore suggest that dollar yuan would fall. This is offshore, naturally. If we get back above 692.5 for this, that would suggest to me we're going back to the highs. So keep an eye on that. That would also suggest that dollar Sing is going to rally, and it's trying. We've still got this in a week, on a daily as it is. On this weekly, it's still got this rolling pattern where it hasn't been able to get up above sort of the 138.70 to 139. It's stalled as the US dollar's moved, stalled. There's a lot more people thinking, heck, I want to be long emerging markets for next year. I want to buy emerging markets, those kind of things. Now, Singapore is not an emerging market, but it's my emerging market, developed market, crossover hybrid, if you want to call it that. And as I always say, I know the MAS is a formidable opponent when it comes to foreign exchange. But that for me is something worth noting. What do? We rolled over, but we bounced back. So keeping an eye on that. 137.33 on the dailies is the level where I say, heck, maybe it's turned around. You can't really see much there. This is but basically we've had this full round trip. If we get much further down, we're going to be talking about 102.5 or thereabouts for Aussie Kiwi. Anyway, gold's broken out. You can see that here. Draw a top across there. It's now broken out. Within the context of this move, this is consistent. And for me, there goes the F-35s and the F-18s. Wow. That is a different sound. I live near the Air Force Base here, just north of Newcastle. And today, wow, that is a completely different sound. Today's the day we get our F-35s delivered, and they've just flown over the top. Amazing. Anyway, what a bummer. I wasn't outside to see that. So gold's broken out. And that was a completely different sound. Completely different sound. Really high-pitched. Anyway, so we've broken out. The MACD still suggests higher levels. The MACD turned back here when the stochastics were below 30, so that was a good, strong signal for the move higher. Where to now? The 200-day moving average is around 1,257, I think. Now, there's not many assets you see me talk about the 200-day moving average, but gold is one of them. I have seen you can see even just here, support, 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 break, resistance, 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 resistance. And the 1380, the Brexit day and all those kind of things, they were 200-day moving averages too. So this is about the only asset on the planet where I take notice of the 200-day. Now, why am I talking about that on the weeklies? Because it's a long-term thing to look at. So 1256, 1257 is the level to watch. I'm still blown away by the sound of that F35 going over the top. Anyway, silver still in a range. So we've basically got a $1 range between $14.90 and $13.90, give or take a few cents. So nothing going on there. But if we can get up and through 15, $14.90 would be the initial move, but up and through 15, and silver can have a bit of a run, a substantial run. Copper had a big reversal last week, still in this wedge, triangle, whatever you want to call it. And 286.5 top side. I think the low now is so this is 270. So 270, 269.5, 270 are going to be the numbers to watch this week. Very much, this is about US dollar. This is about trade truce. This is about uncertainty. Copper will roar if we genuinely have an armistice in hostilities. But for the moment, it's still uncertain, so it has not. It's trading within that range. Will break out. So WTI tried to bounce last week. On the dailies, has that bottoming formation or trying to have that bottoming formation. On the weeklies, we haven't actually got a signal. The weekly for Brent, the MACD is still down, and the long-term trend is still, medium-term trend is still down. So there is still some downside pressure, but basically, while it can, that's a nice little potential turning candle, that one. So as long as it stays above the lows, WTI and Brent, it can start to bottom. But overall, I look at that chart and I think I want to sell rallies. I just got to deal with a daily rally. So similar story here. A big, a Jimmy R 15 and 30 has turned. This is Brent, obviously, and we'll see how that goes. Bitcoin tried to mount a bit of a rearguard action. I think I said on Twitter 3,400, below 3,400 opens, blah, 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 which it does, and the outlook is poor, but it's got to close below 3,400 before the outlook gets poorer, if I put it that way, but I am bearish, right? Basically, there's the top, 28, that's the daily, 28, 23, that's the bottom, say 26, roughly. What do you got here? You've got a bearish engulfing, and for the first time since April, back here, April 2016, when it was about 2000, we've got a turn in the Jimmy R. Now, that for me is the simplest way to tell whether we're in a bull market or the outlook has deteriorated. So it's the first week of a turn. I'm going to, as I've written, I'm going to respect the levels unless or until they break. But if I get a move through 25.95 with the Jimmy R pointing down, I'll be selling some, looking for 24.87. Dow has not had a Jimmy R turn yet, which is really quite interesting. It did not have, different construction obviously, it did not have a bearish engulfing week, but it does look somewhat tenuous as well. But Dow's, I don't like the Dow. I don't like the way it's constructed. NASDAQ is pointing lower. The Jimmy R turned a few weeks back. Have a look at Apple. Have a look at Apple versus the NASDAQ. And what you see with Apple is you see, and what I'm referring to here is my my weekly scan. You see that Apple had a bearish engulfing, like a really big one. And even though the NASDAQ had a big reversal, it didn't really reflect the move in Apple quite as badly. So keep an eye on Apple and what Apple does, and we'll see where things go from here. But overall, the pressure remains to the downside. And I've written for myself for the NASDAQ, medium-term trend lower, price failed at previous trendline resistance, 64.49 support, 72.29 resistance, and the trend line is 7167, which is basically where we are. Now, locally, what do we got? We're breaking down. If we get down through 55.85 on a day close basis, it looks bad. 55.75 on a week close basis looks terrible. My sense is I'm starting to think about, and I've written to myself, 5,300. Sell rallies on that one, obviously. The DAX in serious strife. Shoulder, head, shoulder, target 10,000. That's been the target for a while. That remains a target. China A50. I'm going to show you this one. Still in a range, but keep an eye on that one. Have a look at the monthlies on that one. And that's it. Now, soybeans did break higher last week. That could be hanging. We'll see how it goes this week as an indication of where trade and the trade wars are going. Right, so that's it from me. 21 minutes. It's a big week. We've got the ECB ending QE this week. We've got Brexit messiness. We've got US CPI and PPI. We've got Huawei. And we've got the Fed next week. So we've got at least 2 more weeks of volatility, folks, before things settle down and you can start to think about the holidays and that kind of thing. And I'll be out tomorrow or the next day with the offer, with a special before Christmas to get everyone signed up so you can all forget about it and come back and we can kick off with 2019. Have a great one. I'll be back tomorrow. Bye for now.